And viewers, we have a breaking news update. The October CPI data has come in at 0.25%. Against what was estimated at 0.4%, and this is also as opposed to 1.44% recorded in the month of September. So therefore, this has come in at a record low. And my colleague Vishwanath Nair joins us to decode these numbers. Vishwanath, what are you picking up on this?
Right, so as you mentioned, about 0.25% on the inflation front, Malika. That's obviously something that is a shocking number, because 0.4% was what was widely expected by economists polled by Bloomberg. About 34 economists had estimated that. So this is coming in lower, largely coming in because of food inflation. That is coming in, specifically vegetables, down a double-digit 27.57% lower on the food inflation point. As well as if you were to look at where pulses are, negative 16%. So that's obviously the major contributors to the overall inflation number coming in for the month of October. And obviously all of this is coming into existence at a time when the expectation of inflation is still higher compared to where the actual numbers are coming in. And let me actually go across to our guests for the day, Gaurav Gupta, who's joining us on the video. Gaurav, welcome to this conversation. Also, Garima Kapoor from Elara Capital, who's also joining us. Welcome, ladies. I wanted to start with you, Gaurav. Firstly, this food inflation number, negative 27%. I was just looking at the internals there. Largely contributed by a negative 27% on the vegetable prices. So I'm trying to understand from you, they are highlighting, the government seems to be highlighting in its release that there is a GST benefit that is coming in October, so obviously that is helping. But clearly it's the vegetable prices that is pushing down the inflation number, right?
Definitely. So our estimate was around 0.2. So it's largely in line with expectations. So there are a couple of things which have helped. One is you've had a strong base effect, which has pushed it down. The other thing is definitely the food inflation. Food inflation is, I think, minus 3.7%, largely led by a sharp decline in vegetable prices. There's also the impact of GST. So if, let's say, GST transmission had not happened, then your CPI, the headline inflation would have been, let's say, around 0.5%. So instead of a 0.5%, it's a 0.25%. So that gap is actually thanks to the GST rate cuts. Our expectation is that the GST cuts, the transmission, will be spread over 2 months. So we've seen already a part of the transmission in October. The remaining will also get transmitted in November. And the low CPI food inflation reflects largely positive monsoon pickup in supplies. And it's not just isolated to vegetables. You're also seeing moderation in cereals and pulses. So I would say it's quite a broad-based disinflation that is happening within the food price basket.
Garima, I want to take this question next with you. When we're looking at the core portion of the inflation trend, that 4.4%, that's still higher than what was anticipated. Actually, the market was estimating close to 4.1% for core inflation in the October period. Do you think this is slightly higher, maybe coming as a bit of a negative surprise to you?
A large part of the core, frankly, is also being contributed by what's happening to your silver and gold prices. So while silver and gold really did not increase very sharply in October, in November, you're seeing a very sharp increase in the early days of November so far. But that apart, you should also remember that when GST rate cuts came in, a large part of the rate cuts were concentrated in the goods category. In services category, you saw some bit of rejig, where certain services actually saw an increase from the rate that they were to another higher rate point, and also differentiation in terms of, let's say, premium services for airlines versus economy services for airlines. So these all factors also mean that the services part of the inflation was expected to see much more disinflation than that of goods part of the basket of CPI. Now, having said that, apart from that, you have certain aspects within the CPI services which are fairly sticky in nature and do not really get significantly impacted by very strong seasonal factors and aspects in food get. And hence you've seen this divergence play out. Now, it's quite possible that going forward next month as well, because the increase in silver and gold prices has been much sharper so far in November, the CPI on core impact in terms of index would remain even stickier, somewhat higher.